I'm joined by Haendel St. Juste, Managing Director with Mizuho Securities US. So, Haendel, what do you see as the marginal drivers of U.S. REIT performance going forward?
We've seen a lot of volatility in the space over the last few weeks here. I think a lot of uncertainty about interest rates. We've seen the 10-year go from 1.4 to 2.3 here over the last week and a half. A lot of uncertainty about what the Trump administration has in store for real estate. I think that the past few days we've seen a rebound in the stocks. I think there's a suggestion that higher inflation, some of the job initiatives that we may see could certainly benefit the economy, and it could obviously lead its way into stronger demand for U.S. real estate. But the valuation argument, I think, is a bit off the table here. The stocks have been repriced. They're down 20-ish% since the 1st of August. So we are heading into a slower growth part of the cycle. Fundamentals are slowing. Still good by historical standards, but when you put that all together, certainly feels like the volatility is probably here to stay in the near term, but we still see REITs as a good long-term investment, and certainly the valuation pullback here provides a good opportunity, a good entry point.
So are those valuations in line with fundamentals in your opinion?
I think they've probably been oversold here over the past few months. I think fear, we've said that the stocks, in particular the retail stocks, have been trading on fear. Obviously there's concern about rates, but then we've seen a number of store closures. We've seen the Macy's news. There continues to be risk for further store closures on the retail front. We think it's part of the natural retail cycle. Bankruptcies are part of the business, but there's a concern obviously that the wave of stores may grow in number and certainly could impact growth. But I think that, yes, the stocks here are not trading, I think, on fundamentals, more on fear, but it is clear that the fundamentals, we do see slowing growth, so investors are right to have that concern on their minds, but we think the sell-off's been overdone.
And then what do you see as the main maybe challenges and opportunities for the retail sector going forward?
The continued number of stores that we get back from the retailers is good and bad. Clearly the short term presents a drag on occupancies and NOI, but certainly for the higher productivity landlords, the ability to get some of that space back, bring in better, stronger tenants that'll drive more traffic to their stores, pay higher rents are a good thing, but the key is not getting back too much at one point in time, but certainly feel again that the better centers are in a better position than some of the lower productivity names.
Well, thank you so much for your time, Haendel.
Thank you.
And for more on this and other REIT news and analysis, be sure to visit REIT.com.